Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Welcome back, everyone. A headline from Deadline. AMC Entertainment stock drops 15% in first week of 2024, establishing all-time low at start of daunting box office year. Well, this is going to be the narrative. I've been warning on this channel that the financial/entertainment media agreed on a theme going forward. They will need something to clobber the stock with if we have a surprise fourth quarter result. What's most shocking to me is what's not mentioned by the financial media and how absolutely silent AMC Investor Relations is, even after the box office achieved $9 billion last year. All we can count on from Investor Relations is to comment on more dilution at record low prices with over $750 million in liquidity. You guys know where I stand on this. I am completely against swapping unregistered stock for debt at record low prices. But this is how Adam assists Wall Street. He sells our shares at record lows, just like he did with Ape, the pounce. Today we pounce. I would prefer if he didn't make strategically timed announcements and tweets about bankruptcy risks or more dilution, killing rallies and killing the opportunity to swap our shares at much higher prices, getting more bang for the buck. I wish he and Investor Relations would focus on releasing all the wonderful accomplishments AMC and the industry have achieved over the past year, but he refuses to do so. I will not argue with you. We do not need to do this now and at these prices. If you think that's untrue, that means you know nothing about investment banking. Now, Uncle Frank was buying all week, and I will post my receipts along with everything else I was buying at the end of the video, not investment advice or advisor. From the article, AMC stock fell 2% today and dropped 15% this week to establish a new all-time split-adjusted low of 517. It is a notable turnaround after the unlikely boost delivered in 2020 by meme-happy individual investors who built positions even as movie theaters were shuttered by COVID. I think it's only fair to mention that yes, during 2020, while our theaters were closed, while we were being starved for films from Hollywood, less than 50% of what we were accustomed to, Adam Aron doubled his comp plan. All right? Continuing, some shareholders have more recently become restless about the challenges facing the #1 movie theater circuit in what is setting up as a daunting year at the box office. Now, guys, both strikes are over. The box office could recover, but this is what they're going to keep saying over and over again. The overall release slate, as of now, features significantly fewer major titles than last year due to factors including the dual strikes of 2023 and continued uncertainty about post-pandemic movie-going. In addition to those operational issues, there is the specter of dilution in light of the company's issuing of new shares in order to pay down debt. Notice the company hasn't mentioned who they're paying that debt down with. Who's the creditor? In the most recent instance, earlier this week, the exhibitor reported issuing more than 3.25 million Class A shares in exchange for 22.5 million, which it plans to use to pay down notes due in 2026. Okay, that is good. We're pushing maturities down the road, right? But we're doing it at ridiculously low prices. When you're $5 billion in debt, when your long-term debt is over $9 billion, killing the company this way, killing the stock, this isn't the way to do it. Let the stock rally, build the stock, build momentum, and sell at much higher prices. But that would not benefit Wall Street. The concern some investors have, now they're speaking on behalf of us, is about the increased volume of stock limiting buy-side demand and diluting the value of all shares, though many on Wall Street have indicated they fully expect AMC to continue using share exchanges. So is that the chief concern of an AMC shareholder, it's not naked short selling, it's not spoofing and layering, it's not manipulation, dark pool, misuse and abuse. It's none of those things. It's only that we're doing these equity for debt swaps, because I talk to a lot of apes and they're really a lot more concerned about how the stock is blatantly and flagrantly manipulated on a daily basis. Anyway, in this week's filing, the company said it may exchange in similar transactions in the future. Oh, I'm sure every time there's a rally, we're going to announce one. But it's under no obligation to do so. What we need Adam Aron to do here, the only way the stock has a chance, really, is if senior management would agree, okay, we're done with the swaps for this year. We're done with the swaps for the next 6 months. Without that, we just give Wall Street too great an advantage. Okay. Last November, despite strong third quarter financials and optimism in Hollywood about the end of the SAG-AFTRA strike, we could say that was the greatest third quarter in the history of the company, but they won't do that. AMC stock plunged after the company announced the plan to raise up to $350 million through stock sales. Yeah, I was there for that. We had the greatest third quarter in our history. Adam didn't mention anything about the stock sale plans during the call. The next morning before the market, when we were going to rally through the roof, he dropped it. Okay? There is no defending that, guys. That is exactly what he did. The article continues, AMC Entertainment will report fourth quarter earnings in the coming weeks. Across the industry, the holiday quarter was a bit lackluster, especially compared with the comparable frame in 2022 and breakout titles like Avatar, The Way of Water. Okay, yes, we did not have an Avatar, but it would be nice if Deadline mentioned that we did achieve $9 billion as an industry when every one of them predicted we weren't going to. They could have mentioned Color Purple was like the best, like second best Christmas showing in history. I mean, we did a lot of great things, achieved a lot of great things. They will never mention, but that's how it is. That's how it is on Wall Street. Do you think Deadline could have mentioned AMC became a top 10 distributor of films in the fourth quarter of 2023 in a brand new business venture, leapfrogging dozens of other companies, including MGM, according to this chart? And hey, check this out, guys, from Business Insider. It looks like LinkedIn is becoming an unexpected dating site. Shows social media's shifting landscape. Well, I better go check out my profile and see who's been checking me out. Well, 4 people from Citadel, 2 people from MUFG, that's Mitsubishi Financial Group, 2 people from DRW, that's a trading firm in Chicago, 2 people from Barclays, and 2 people from JP Morgan. Why you guys coming by my page? You want to take me on a date? Or maybe there's just a bunch of short sellers out there that are lonely. All right, you guys should know I'm not Adam Aron. We ain't going to be exchanging dick pics and naked pictures, so stay the hell off my page. I'm not interested. Okay, you guys need to take notice of this little headline because nobody is talking about this shit and you need to know about it. From the Cryptopolitan, Morgan Stanley downgrades US dollar rating, the catalyst. Morgan Stanley, a titan in the financial world, leader of AMC Entertainment's board of directors, rocked the financial currency markets by downgrading the US dollar from bullish to neutral. This strategic pivot by Morgan Stanley isn't just a routine adjustment. It's a reaction to a series of global financial tremors, with the epicenter being the Fed Reserve's interest rate cuts and the BRICS bloc's aggressive move towards de-dollarization. Last year, Morgan Stanley stood almost alone in its bullish stance on the US dollar against the current of a largely bearish market sentiment. Fast forward to today, and the landscape has shifted dramatically. The bank has now aligned with the broader market view, echoing sentiments expressed earlier by counterparts like Goldman Sachs, which labeled the US dollar as bearish. The downgrade arrives amid a backdrop of a steadily declining US dollar index, currently hovering around 102 points. This dip is more than a blip on the radar. It's a beacon signaling a potential shift in the global currency power balance. Pay attention, guys. And on topic, here's a victory lap for my gold bugs, Black Arrow, Optimal Projection, and Dom, the Magic Donkey of Toronto. Central banks go for gold in bold move to safeguard dollar. From the article, central banks globally have purchased a record 374.1 tons of gold in 2023 as a strategy to support the US dollar against BRICS de-dollarization efforts. This gold buying spree is part of a broader move to diversify economic assets and reduce reliance on the dollar. Russia and China are leading this trend, integrating gold into their economic policies as a hedge against dollar instability. Okay, on Swan Watch, there's a couple things we need to review. 5 new countries officially joined BRICS. That was from 3 days ago. And from the Cryptopolitan just an hour ago, Iran joins BRICS in plot to permanently dethrone the dollar. Real quick from that article, the global economic landscape is on the cusp of a seismic shift with Iran's recent announcement to join forces with the BRICS nations in a strategic move to challenge the dominance of the US dollar. As the geopolitical chessboard sees a new player in Iran, the ambition to create a BRICS currency is not just a financial maneuver, but a bold statement in the realm of international power dynamics. Now, what is BRICS? BRICS is an acronym for Brazil, Russia, India, China, and South Africa. The term was initially created as BRIC without South Africa by Goldman Sachs economist Jim O'Neill back in 2001. He believed that by 2050, the 4 BRICS economies would come to dominate the global economy. All right, guys, this story isn't going away, but I want to share something with you you may not be aware of. Okay, so BRICS is an acronym, right, for Brazil, Russia, India, China, and South Africa. Let's add an I for Iran. We'll call it BRICSy. Now it sounds like an index, right? But check this out. B stands for Brazil. From September of last year, XRP price prediction as Ripple Labs opens up liquidity hubs in Brazil and Australia. Adoption on the rise. R is for Russia. From Finbold, Ripple reveals 8 countries building CBDCs on the XRP ledger. Who's there? Russia. I is for India. From Watcher.guru, Ripple confirms XRP ODL payments are now available in India. C is for China. Ripple joins Hong Kong CBDC pilot, partners with Fubon Bank. S is for South Africa. From Yahoo Finance, Ripple partners with On Afric for African cross-border payment channels. Partnership, South African fintech On Afric, formerly MFS Africa, to leverage Ripple blockchain across Africa via 3 fintech partners. On Afric is one of the world's largest remittance services providers, operates in 40 countries across Africa, and boasts a whopping 400 million mobile wallets. And then from Coinpedia last month, Ripple arrives in Africa on Afric partnership to capture $2.7 trillion market. See where I'm going with this? Now, guys, crypto is a high-risk asset class. In fact, many are predicting a big sell-off in the space soon. This is not financial advice. I am not a financial advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. Uncle Frank is not a lawyer, so he can't give you legal advice. I'm not a CPA, so I won't give you tax advice. I'm not a therapist, so I can't give you relationship advice. But I use Uphold because they were basically the only platform that had the balls to let me trade XRP while Ripple was in court with the SEC over a completely bullshit case, which continues to this very moment. Here are the 3 reasons from their website I like Uphold. They were pioneers of radical transparency in the crypto space since 2014. We never loan out customer assets, and we don't just say it, we prove it. We publish our assets and liabilities every 30 seconds on the website for all to see. And I showed you a little screenshot of that. Now, I left a referral link in the description of this video if you'd like to do more research on your own on Uphold and XRP, and you should speak with your own financial advisor before investing or trading. Now, to all my subscribers, Uncle Frank isn't saying anything here personally. I just want you to listen to these headlines in order so you could make up your own mind. This is not a hype channel. From the FinTech Times, July 22nd of last year, FedNow, the Fed Reserve's instant payments service, launches in the U.S. Okay? Then, July 26th, Ripple partner Volante to take FedNow cross-border after regulation. And then from Forbes in September, FedNow has launched as blockchain innovation delivers next-gen instant payments. And then from the Crypto Basics, same month, will the U.S. FedNow use XRP? And then from Payments.com 3 weeks ago, FedNow closes 2023 with 300 plus FIs using network. The Fed Reserve says 331 financial institutions, or FIs, are employing its FedNow real-time payment system, which launched in July. Can you guys now see why Gensler's SEC is messing with Ripple? Do you see how important this technology is? XRP was never a security. It'll never pay you interest like a bond. It'll never pay you a dividend like a stock. Owning XRP doesn't represent ownership in the parent company Ripple like a share of stock would. This is about power and control, and Gensler will go down as the worst, most ineffective SEC chair in SEC history. And I promise you, Gary, you'll never be Treasury Secretary because 3 million apes will march on Washington before we let that happen. So what's the current chatter on the new Bitcoin ETFs? Well, the first one made me laugh out loud. If you don't think they believe we truly are dumb money, listen to this headline. BlackRock layoffs coming as firm matures, ESG pullback, and Bitcoin ETF approval. Coming layoffs at BlackRock could put as many as 600 employees out of work. So what you're saying is because we don't have to do ESG anymore and we're about to release some of the hottest ETFs ever, you guys needed to lay off 600 people? Okay, let's start 2 days ago. This was the narrative from Forbes. Huge $1.5 trillion ETF snowball effect prediction triggers sudden Bitcoin price surge, boosting Ethereum, XRP, and Solana. Well, you've seen what's happened since then. But now within the past 24 to 48 hours, SEC moves closer to spot Bitcoin ETF approval with 19B-4 amendment filings. Then from Bloomberg, Bitcoin ETF issuers clear major hurdle on path to SEC approval. And then from Market Insider, Bitcoin ETF hype lures Goldman Sachs, report says. And then from Bloomberg again, JP Morgan, Goldman in talks with Grayscale about Bitcoin ETF roll. Wonder what's going to happen Monday on this. From Benzinga, AI is going to be the next gold rush. Analyst breaks down huge artificial intelligence opportunities in 2024. Now, fans of this channel know I believe artificial intelligence was a black swan for the predatory short hedge funds last year. Not only did it deny the big correction they so badly needed, it produced a rally that produced my favorite headline so far this year. Short sellers lost $195 billion in 2023 despite wins on regional banks. I also believe this was behind the big attack on Apple by shady Wall Street analysts. Right out of the gate, first day of the trading year, they needed to hurt the biggest dog of the Mag 7, which would hurt the rest of them. But I also believe artificial intelligence has many more surprises and could produce a rally out of nowhere, hurting the shorts even more. If you're interested in AI, I strongly urge you to go read that article and join me in rooting for surprise rallies to burn the hedge funds and force margin calls and liquidations. Guys, have you ever read an article only to find you have no clue to what you just read? Well, from the great freaking robot today, Barbenheimer set to start shooting, here's everything we know. Creative thinkers have chosen to create a singular film, mashing Barbie and Oppenheimer together like a destructive toddler slamming dolls from two unrelated playsets into each other. Barbenheimer is set to start filming on January 22nd in California and touts a directing credit from indie horror filmmaker Ted Nicolau. Nicolau has been helming feature films since the 1980s, with credits including Subspecies, Vampire Journals, and TerrorVision. All right, guys, I don't know exactly what this is, but if it develops into something, at least you could say, oh yeah, I heard about that on the Uncle Frank Show. And in hedgy news from the New York Post, hedge funds like Ken Griffin's Citadel, Steve Cohen's Point72 lagged the stock market in 2023. Sounds like good news to me. Major hedge fund moguls, including Ken Griffin, Steve Cohen, and Izzy Englander, failed to keep pace with the S&P 500 and the NASDAQ in what proved to be a difficult year for the money managers. While Griffin's Citadel led the pack when it came to performance, his flagship fund, the name typically given the Premier Fund, only managed to notch gains of 15.3% for the year, according to reports. In comparison, the S&P climbed 24%, while the NASDAQ rose 43%. You don't even need these guys, okay? They have every advantage in the world. They cheat, and they still can't keep pace. You know, you would have been better off just buying index funds. Good. I hope this results in billions of redemptions from these clowns. And now a headline from yesterday from the pus-filled boil on the ass of Wall Street, Investor Place. 3 short squeeze stocks set for a January rally. Exploring January's top short squeeze stock picks where high short interest ratios meet potential market rallies. We look at stocks with a high short interest ratio that could benefit from the improving risk sentiment. And they pick Fisker, Beyond Meat, and Plug Power. From the article, for those retail traders who want to identify potential stocks for a short squeeze rally, a closer look at short interest data is imperative. Specifically, the short interest ratio, a metric revealing the proportion of shares held short in a stock relative to its average daily trading volume, plays a crucial role. The short interest ratio is calculated by dividing the number of shares held short by the stock's average daily trading volume. Along these lines, a short interest exceeding 20% of the float is generally considered high. Bottom line, this ratio offers a swift indication of a stock short interest, providing insights into market sentiment. Well, with that in mind, let's go look up AMC, shall we? So I went over to Yahoo Finance to use the most shorted stock screener. Then I added a filter. I only wanted to see the companies listed on the New York Stock Exchange like AMC, and I got 2,894 results. But I don't see AMC anymore. We used to always be on this list. Little Bigums, Boss Schmuck, Really Bad Person, what happened? So who is on here? Well, I see Carvana, I see Fisker, I could see Cinemark if you can believe it, I could see GameStop. Where the hell is AMC? What happened? Oh, I know what happened. You see, APE was a declared dividend. No shareholder vote required. And APE was paid to around, 513 million legitimate AMC shares and maybe another 2 billion synthetic shares. That's just a theory of mine. That Adam Aron said don't exist. Then they converted those into AMC. Now I remember the pounce. Today we pounce. You see, the APE Its conversion and its reverse split were designed by our chief investment banker, Derek Van Zant of Citi, a short seller of AMC. The guys we use to do all these private placements of our stock. That's not a conflict, right? The same company with a sell recommendation on the stock. Then Adam and Philip later, a current senior advisor to Morgan Stanley Institutional Trading and leader of our board of directors, signed off on it. Before all that, we sold APE at near all-time lows to Antara to rig a shareholder vote, in my opinion, who we are now swapping stock for debt. Okay, but that's just the theory. They won't disclose it. But we're doing it at all-time lows, but this time with converted APE, which is now just AMC shares. You see, if I were a short seller of AMC and over my skis on my trade, this entire scheme would be exactly what the doctor ordered. It's literally designed by short sellers for short sellers in our very own boardroom. If you ever wondered why Adam, the entire board, and the entire senior management team has never purchased a single share of AMC in 6 years, it's because of this plan. Let me explain it to you in a way a 6-year-old like Crystal Ball could understand it. What we're doing now is exactly like selling a $100,000 investment property for $5,000 and using the proceeds to pay off a $5,000 balance on a high-interest gas station credit card. It's fantastic for our short sellers, just not us. So what is AMC's current fake short interest? Because they're not going to count synthetics. Short interest is the volume of AMC shares that have been sold short but have not yet been covered or closed out. So as of December 15th, investors have sold 18.3 million shares of AMC. That's 9.25%, not even enough to get on the list. What's a good short interest ratio for AMC? Well, the short interest ratio, also known as days to cover, is calculated by dividing the number of shares of a stock sold short divided by its average trading volume. A short interest ratio between 1 and 4 generally indicates strong positive sentiment about a stock and lack of short sellers. A short interest ratio of 10 or greater indicates strong pessimism about a stock or a lot of shorters, right? AMC currently has a short interest ratio of 1. You see how that works? You see, Adam, Derek, and Phil gave Wall Street exactly what they needed. Remember, shares available to borrow and short. Remember when there used to be like 3,000 or 30,000 and the cost to borrow was like 1,000%? Now there's between 4 and 5 million available every day, plentiful. And the cost to borrow is under 1%. They did exactly what Wall Street needed them to do. I hope you can see that by now. So, Uncle Frank, you promised to show us what you were up to last week, and I'm sure, like some of you, I was getting alerts on new 52-week lows for AMC, and I nibbled at them trying to lower my average cost. AMC's lowest price for the week and newest 52-week low was $5.08, or 50.8 cents on a pre-split basis. AMC closed at $5.17, down 13 cents or 2.45%, and then lost another couple pennies after hours. I also added to my UNG position, which is a natural gas ETF, and I added to GUT, the Gabella Utility Trust. Okay, on your screen is the monthly chart of UNG going back to 2016. You can see it plummeted from 61.12 and then put in what looks like a solid bottom at 450 and then began climbing out. I'll show you. Okay, now this is the daily chart of UNG, and it had a pretty good week, up 14.4%. I'm not that wild about that last candlestick, so I'll be watching this closely on Monday to see if this reversal is real and the uptrend can continue. UNG closed at 584, up 7 cents or 1.21% on Friday, and then after hours added another 4 cents, which was 0.68%. I'm not going into the whole background on natural gas. I'm a fan of natural gas, and right now this trade is working pretty well. Okay, guys, on your screen is the monthly chart for GUT, G-U-T, Gabelli Utility Trust, one of my favorites. The reason I prefer the utilities over treasuries is, the utility companies, they're not 34 trillion in debt. I also am really not that fond of the corporate bond market all the time. So the thing I like about utilities is, if you don't pay the light bill, they shut it off. They've got kind of an ironclad collection policy. The thing I like about GUT is I like Mario Gabelli. He's one of the good guys on Wall Street. At these prices, figure at 551, this pays a dividend yield of 10.89%. The other thing I like about GUT is it pays monthly. So I add to it here and there, and I really never plan on selling it. And it trades pretty consistently, and I'll show you on the next screen what I mean. So what are some of the downsides to GUT? Well, it trades at a premium over its net asset value, but it always seems to do that. I put a couple lines on this weekly chart. Whenever it gets under 6, towards the lower end of the range of 520, I'm looking to be a buyer here. When the price comes down, yeah, I mean they could cut that dividend yield too. That's one of the risks. But so far, GUT's been very predictable for me. And this is the range that I like to buy it in. So I told you guys I would tell you what I was up to. And like I said, this is the weekly chart, and I put a couple lines on there so you can see when it drops under 6. Towards the bottom end of the range, you get to the 520s, 550s. If I have extra money, I'm gonna always add to this position to create that monthly income flow. Now, before I close this video, I wanted you to know Investor Place published just one more hit piece for the weekend titled AMC's Blockbuster Bust, a reality check for die-hard fans. So this is directed, right at the shareholders by Thomas Neal. Now, Tom is a big freelance financial/investment writer. He's got over 200 connections on LinkedIn and 200 followers on Twitter. So this is a big hitter. And here's a little more on Tom. Now, you all should know Tom is a big Wall Street player in financial media. I think I traced him to this 500 square foot studio apartment where he writes all these hit pieces from. He works with all the high reputation firms like Investor Place, Seeking Alpha, and TipRanks. From Tom's own resume, it has all the Wall Street giants you'd expect, like OST Incorporated, where he was an intern. Arthur Lander, CPA, where he was an intern. National Tank Truck Carriers, where he was an intern. I just like to say F you and everyone that does what you do for a living, Tom. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.